Good morning, good afternoon, everybody. Welcome to the 21 Shares webinar or analyst call. We're going to get started in 30 seconds. Get comfortable. Today is going to be a very insightful and richful session with our wonderful researchers from Lina to Max, as well as Tom joining from our BD team. We're going to focus on the global macro event to explain to you guys what happened and what we're expecting moving forward. And of course, crypto as being a macro asset, we're also going to showcase the recent crypto sell-offs and what we should be expecting within the asset class. Today, I will be your moderator. I'm Ellie from 21 Shares as well, leading BD and strategy. And I am very thrilled and honored to be here and supporting our research team with this update. All right. Without further ado, we're going to have multiple people on this call discussing and presenting you some of the insights that we have. First is going to be Max. So Max is going to cover the first part with Lina as well to explain what happened at the macro level. We cannot focus just on the crypto asset industry. So we have to also look at what happened globally in the US and Japan, as well as in the Middle Eastern conflicts that we have seen over the past couple of days. So Max, without further ado, the floor is yours.
Yeah. So hello, everyone. I hope you're having a good Monday despite the current market conditions. But I'm here to hopefully bring a shining light to this dark Monday. That being said, I think the first thing I'd like to point out, which is always worth remembering in moments like these, is that crypto is a borderless and what we like to call a macro asset, meaning that it is affected by events happening all over the world, regardless of their region. And as such, crypto is becoming more and more affected by events that happen globally. And over the last few days, there were a number of events which coincided with one another and kind of created the unfortunate storm that we're in. So let's get right in. I think the first thing that's worth pointing out is the fact that the Bank of Japan raised their interest rates to 0.25% on Wednesday, which is actually doesn't sound like much, but it is their largest hike since 2007, coming just a few months after they ended their negative interest rate regime. So this led to a lot of the yen and yuan carry trades to be capitulated over the fears of a recession in Japan. And this obviously has kind of implications for the global liquidity and risk sentiment. On top of that, we had the US jobs report on Friday, which led to unemployment coming in higher than expected, which, as we always say, increases the probability of a rate cut, which would be bullish for risk on assets. However, there are kind of looming fears of a recession, not just in the US, but also worldwide. This affected the traditional equity markets already on Friday, but we're seeing that they are going to likely open in the red on Monday as well, as you can see on our chart on the right-hand side. In Asia, the stock market today had a very bad day as well, with Japan opening with the largest two-day drop in Nikkei history, down 7%. And as we saw on Friday, the kind of earnings reports for multiple tech companies is quite disappointing. Not only Tesla, which showed a 45% drop in profits, but also a number of other tech firms who have seen kind of disappointing returns on investments within the kind of AI space. So this kind of aggressive market movement does suggest that bonds are kind of being bought aggressively and equities as such are being hammered. But within the crypto space, I think it's also worth remembering that crypto was the only asset that was tradable over the weekend. And as such, the kind of reactions to these events might have come in at that time when other assets couldn't be traded.
No,
Is there anything you'd like to add?
No, I couldn't agree more with you, Max. And I think it's a great overview of globally what happened, especially on on the Western side of the world. But I still think that, as you mentioned, with several asset classes, especially in the equity market being impacted, I think fast forward to the second slide, we can discuss also about over asset classes as well, especially on the commodity front. So maybe you want to give us a quick outlook on what we've seen, especially in light of the recent geopolitical tensions that 𝕃𝕚 would talk afterwards. But first, talk to us more about also the impact on commodities like gold too.
Yeah, no, so the commodities were also heavily impacted over the weekend. I think Brent and WTI saw a 3% decrease, which shows that this kind of market downturn, as you said, is not just limited to the equity market. This would have come as a kind of result on the murmurs and what we're hearing about coming out in the Middle East, where we have geopolitical tensions rising. And I think maybe 𝕃𝕚 can expand on this.
No, definitely. Thank you, Max, for the intro. Yeah, so what we're seeing or what we're expecting is that Iran will retaliate on the assassination of one of the significant Hamas leaders that were residing in Tehran. He was assassinated last week, and we are yet to find or yet to expect or receive any retaliation from their front. The U.S. Secretary of State Antony Blinken told the G7 that there will be a retaliation from 24 to 48 hours. So as early as today, we still didn't, or as far as I know, we're still waiting for that response. If you guys remember, back in April, there was also some kind of exchange between both Israel and Iran on the exact same front. However, the retaliation was a little limited, but we should be seeing something more substantial. And we're seeing that Bitcoin has always been the safe haven, the unbothered store of value, but we're seeing more and more that Bitcoin is an emerging store of value, and that has always been the narrative that we've been advocating for. It has the properties of gold, but in times of crises like these, people don't resort to gold, people resort to cash. And that's what we're seeing in the performance of gold over the past 24 hours. In relevance to Bitcoin.
And for a global censorship resistant and macro asset like Bitcoin, but also for the long tail assets like Ether, Solana, and more, I think there is also the beauty of the underlying technology, the blockchain, where we can find transparency with blockchain analytics. And Tom will walk you guys through as well about what we found on the underlying blockchain analytics that we were able to compute for you guys, because there is a silver lining to this current market distress. Tom, do you want to walk us through what happened as well, more on the crypto side? Because we explain now the equity market and the commodities market in light of the macro events and geopolitical tensions. But maybe it's good also to give an overview on what happened more broadly to crypto too.
Yep. Thanks a lot, Ellie. So over the past 7 days, we have seen that over 72% of the crypto assets have negative 30% return. And Bitcoin specifically has dropped 27%, and Ethereum has dropped 34% week over week. While it sounds really daunting, as Max and 𝕃𝕚 also rightfully mentioned, right? It's not only a crypto-specific drawdown, it is a wider market, macro-specific drawdown that will lead to the different assets in price drop. As we can also see, FIX has increased by 155% in a single day, reaching 65, which is the highest level since the pandemic crash. So you can see the level of this macro uncertainty is similar or comparatively to what we have been seeing previously during the pandemic. And now we are here to share more in details about what we're seeing in the crypto sector side of things.
And for the VIX indicator, which is the volatility index for the options traded on the S&P 500, this is the third highest level that we've seen after '08 and the COVID-19 pandemic. And I believe as we speak right now, the VIX level is at the same level as what we experienced during the COVID-19 market crash. But interestingly, at the time, we had a significant selling pressure from short-term investors who bought Bitcoin between 6 to 12 months ago at that time in 2020, while the long-term investors took the opportunity to invest more rapidly into this asset class at relatively lower valuations than before. So I think this is a great opportunity as well to showcase also what we have, because we also have real-time data on multiple crypto assets. Think about them as your financial statements in real time, so that you can see the different metrics, such as the returns, the growth of the number of users, and also more metrics to understand what happened more behind the scenes. And of course, Tom is a specialist for that and will give you a fantastic rundown. So Tom, tell us more about the impact on Bitcoin more broadly, but also we are very pleased to show you guys our study on the historical drawdowns that we've experienced in the past 10 years and what has been the impact of the daily drawdowns on the Bitcoin markets as well as Ethereum. I think it's a great study to give more perspective as well to the audience.
Absolutely. So whenever we see a crypto drawdown, while the short-term wick might seem really scary, right? But it's always important to zoom out and understand the larger picture and see what it's fitting compared to historical drawdown as well. And Ellie has done an amazing study previously on understanding what is the historical drawdown. And over the past 10 years, Bitcoin has only twice of a drawdown of more than 20%. And for more than 10%, only 43%, 43 times. So in other words, this is not the worst drawdown that we are having for Bitcoin. And for like right now, we have a drawdown of around 15% for a daily drawdown. So what is happening is we can expect a decline of more than 10% once in a quarter due to the historical pattern. But this is not the worst that we are seeing already. So investors, we don't need to be panicking because this happens before and it's not the worst that we are experiencing. And in terms of investors' behavior, we can also, as Ellie mentioned, due to the beauty of the transparency of the blockchain, we can always understand what is the investors' behavior on the blockchain. So on the right chart, as Ellie is highlighting here, we are seeing long-term investors is actually accumulating more Bitcoin. And comparatively short-term investors are the group of investors that are selling off their Bitcoin, which makes more sense because short-term investors in the past 6 to 12 months, the cost of Bitcoin, of the buying price, is usually much higher than the long-term investors. And therefore, when price drops significantly, they might be worried or they might panic and sell off their Bitcoin. And comparatively, while long-term investors usually have a lower entry price, and therefore they're more willing to enter Bitcoin during the market is panicking. So that's a good chart that we can always refer to as well.
And I think the study that we put together is statistically important, but contextually different, right? Because we are experiencing today contextually a different environment than 4 years ago. However, when we extrapolate for the past 10 years, that gives the investor the chance to experience, unfortunately, a drawdown at least twice every 10 years of more than 10% on a daily basis. And on the other side, once a quarter, so once every 3 months, the drawdown actually may happen of more than 10% only once every 3 months. So the last time that had happened was in the last quarter. So currently we're seeing that the statistics of the study are actually quite relevant here. However, I think it's important as well to give also a step back and looking at the correlation of crypto and the global markets, whether it's the S&P 500 or MSCI World. So maybe, Tom, you want to give a few highlights on what's the existing correlation level?
So the current correlation level right now for Bitcoin is around 0.28 and Ethereum is around 0.43. And historically, we can see a higher correlation previously, but right now we're seeing a lower correlation than previously we're seeing with the S&P 500.
And this is the 30-day average, right? So probably if we're looking at the past, 72 hours, potentially the correlation could be much higher. But this is not a correlation of significant importance compared to what we've experienced, for example, in the last significant drawdown in the COVID-19 market crash of 2020, or even the ones from 2017 or the one from 2015 for the long-term investors in this asset class. So what about Ethereum, Tom?
Right, and Ethereum is also an asset that we put our eyes really closely, as it is the second largest crypto asset in the crypto market cap. Ethereum has experienced a slightly larger drawdown than Bitcoin, with 21% in the past 24 hours. And looking at historical data again, we're seeing this is one of the largest price drops since May 2021. And if you guys remember May 2021, what happened is during that time, China has announced that they are banning crypto, specifically Bitcoin mining during that time. And as a result, we've seen that during that period of time, Ethereum has dropped over 27%. And now we are really close to that level. And now you can see comparatively, it is a huge impact in terms of the macro uncertainty that we are having. And what is also impacting the Ethereum trading volume and the price action of Ethereum as well. What we're seeing is specifically jump trading, which is one of the largest market maker in the crypto world, as well as in the traditional finance world as well. They're one of the leading high frequency trading firm, both in traditional finance and crypto market. And given that they have significant size and experience, they recently have unstaked and sold off potentially 274 million worth of Ethereum since 25th of July. And as a result, due to the transparency of blockchain, it can bring you real-time transparency, but the real-time transparency can also spook potential investors that are more short-term basis. And as a result, it can potentially lead to more sell-off when investors see their action in real time. And on our analysis on the right-hand side, we can also see that jump trading previously has around 500 million worth of staked Ethereum holding. And as of today, it has decreased to about 110 million. So you can see that they have potentially about 110 million worth of staked Ethereum in their wallet address, which could potentially be unstaked and sold in the future. But what we can see in the meantime as well is their USDC, which is a stable coin balance, is also increasing. So what it means is potentially with the decrease in stake ETH, they can potentially be selling off the Ethereum and exchange it for USDC. And as a result, it can cause a price drop on the Ethereum price.
Could you also give to the audience a simple explanation of what staked Ether or staked ETH?
Yep. So Ethereum is a proof of stake blockchain, which is very different from proof of work blockchain like Bitcoin. So in order to secure the blockchain, the Ethereum holders can stake, meaning that it is depositing to a validated contract. The validator, in return, they will validate the transaction on the Ethereum blockchain and ensure that all the transaction going through is not from bad actors. So the network in return will issue more Ethereum to the validators. And therefore, we're seeing about 3 to 4% yield for Ethereum stakers nowadays. And specifically, what we're seeing here is staked Ethereum, which is a derivatives token or a IOU, meaning that investors, while depositing to the validated contract, right, they can retain the liquidity, meaning that they can still use the IOU token, use it for different purposes, such as financing, lending, or use it as collateral for different trading purposes as well. And therefore, it is a new primitive that is happening in the crypto market, which we usually refer as liquid staking.
I think it's good for the audience to understand also the key differences between Bitcoin, Ethereum, Solana, and the long-tail assets. So for reference, we launched the world's first multi-layered classification system, very similar to GICS for the stock market, which we apply the same philosophy to the crypto market so that investors can understand the differences between Bitcoin, Ethereum, Solana, and more to have a clear classification that is standardized and accessible for everybody in a language that makes sense for traditional finance investors. So I think it's good to focus now on the silver lining. If you're curious about all the key information that we have about our research and the different services that we offer at 21 Shares, of course, you can access our websites. But I think, Tom, here is good to focus now on the silver lining, especially on the fundamentals, for the audience to understand what is happening behind the scenes. So we mentioned previously about, the global market and the geopolitical tensions and some of the market drawdowns and the correlation of crypto assets with the existing equity market in the US for the S&P 500. But give us more of a rundown on what we're seeing across multiple metrics that we closely look into for Bitcoin, Ethereum, Solana, and more.
Absolutely. The key message we're trying to send here is the current drawdown that is happening is not a crypto-specific drawdown. What it means is it is not due to the fundamentals dropping or deteriorating. It is a more macro-driven price drawdown and sell-off. And what we are seeing here is a proof of that. For example, the most important metrics, or one of the most important metrics that we're watching closely is the global crypto liquidity, which we usually look into the stablecoin market cap. So whenever the stablecoin market cap increase, usually it coincides with a broader crypto market cap increase in liquidity and increase in market cap as well. The reason behind is with the increase in stablecoin is usually the gateway to enter the crypto market from fiat to crypto. And therefore, with the increase in stablecoin market cap, usually means that more investors can invest in crypto with the new stablecoin minted on the crypto blockchains. And secondly, we're looking into Bitcoin, that's definitely. So Bitcoin continues to be more secure. As we can see from the left chart, we are seeing the hash rate of Bitcoin is near all-time high again. And what it means is hash rate. So hash rate is a good measurement to measure how much computing power is being spent on securing the Bitcoin network. And as a result, if we are seeing an increasing number of hash rate, what it means is also the underlying power that is spent using to secure the network is also increasing, meaning that Bitcoin is being more secure than before. And on the other hand, Ethereum becomes also more robust than previously. So historically, when we see there's potential market drawdown or market turbulence, more investors or more validators usually withdraw from Ethereum with their staked Ethereum. However, from this experience that we're seeing today, only 18K Ethereum is in the withdrawal queue. Withdrawal queue meaning that people has raised their withdrawal requests and try to unstake the Ethereum from the Ethereum network. However, comparatively, 97K ETH is in the activation queue, meaning that more people are willing to stake despite the price drop than withdrawing or unstaking from the network. It shows that the withdrawal time is not being impacted, first of all, but also people are not impacted and are willing to continue to secure the Ethereum network in the long run. And lastly, go ahead.
It's good to highlight as well what does 18,000 Ether represent compared to the number of Ethers staked on the Ethereum blockchain. So today we know that about 30% of the entire network is leveraging the staking mechanism to secure the Ethereum network. But can you give us a little bit more perspective on what does this number represent?
Right. While this number might not be super significant, which is good because right now, Ethereum in total, we have around 116 billion staked on the Ethereum network. Around 33 million Ethereum has been staked. So 18K is very, very minimal compared to the amounts being staked on Ethereum. So as a result, this shows great sign that Ethereum security is not being impacted despite the drop in price.
Absolutely. Sounds good. Last but not least, Solana. So Solana, for the new investors, Tom, maybe give a quick introduction of what Solana. And how Solana is different from Bitcoin and Ether.
Yep. Solana is very similar to Ethereum, meaning that it is a layer 1 blockchain focusing on smart contract. And smart contract is imagine an app store, like what we're using on Apple or on Android. What it empowers developers is you can build applications on top of it. And for an example of a blockchain, what developers are building, it can be decentralized finance application. It can be decentralized or on-chain gaming. It can be social application, like a Twitter or decentralized social media on different blockchains. And Solana is very similar to Ethereum in the sense that they are both using a proof of stake mechanism. But what is the difference here is comparatively, one of the key differentiator here is Ethereum is much more expensive as of today, meaning that when you do a transaction, when you execute a transaction, you need to pay a transaction fee to the network for the validators to process your transaction. On Ethereum, it costs you around $1 to $2 nowadays, but on Solana, it is less than 1 cent. So you can see the user experience on Solana is comparatively much better than on Ethereum. But it doesn't mean that Ethereum is less usable than Solana, because nowadays, most of the liquidity still remains on Ethereum. Over 80% or 70% of the on-chain volume, or 70 or 60, around 60 billion worth of assets are being logged on Ethereum. You can see that there is institutions like BlackRock and different institutions are leveraging Ethereum due to its security for using the blockchain and the underlying technology. However, what we're showing here is Solana's monthly on-chain volume is actually reaching 56 billion in July. And it's also the first time in history that the monthly trading volume of Solana surpasses Ethereum, which is 54 billion in July as well. And comparatively, Solana also has around 1.7 million monthly active addresses. Comparatively with Bitcoin and Ethereum, Bitcoin only has around 400,000 active addresses, similar to Ethereum as well. However, this metrics, bear in mind, there is some nuances. Given Solana is a really cheap blockchain to use, there's a lot of bots and potentially multiple users leveraging 100 or 200 active addresses to do different types of trading activities. So while it is a good metrics to gauge the number of users on the blockchain, bear in mind that this metric also has its flaws of being inflated in the long run.
I think it's a good summary of the existing fundamentals. It's very similar to the past corrections or drawdowns that we experienced in this industry, but even more globally in the equity market, whether it's the drawdown of 2000s after the dot-com bubble. We've seen multiple companies and startups coming out stronger than ever after a significant drawdown with very strong fundamentals. So I think it's good now to move on to the expectations in the market right now, probably focusing on the short-term expectations, at least for the next month or so. What are the key catalysts or events that we should be expecting? Maybe we can start with Max and then Lina afterwards, Tom.
Yeah, no, sounds good. So obviously, I think this kind of will touch on the first question asked here by Yerai, but it would be to think about what's going to happen with these kind of carry trades that are going on regarding the Japanese yen. So for the investors who are not familiar with a carry trade, it's when you borrow a low rate currency, for instance, the Japanese yen. When it was at 0%, they were essentially borrowing a position for free, and they're thereby investing in a currency with higher yields. So I think it would be quite interesting to see what does happen with these carry trades. I think they're being mentioned that they're some of the biggest in the world. But my feeling is that a lot of investors are just unloading their profitable positions to cover their positions elsewhere. And there is still a very nice rate differential between the yen and other currencies. And so I don't foresee that all the carry trades will be unwound, but rather that the movement to a positive rate from the Bank of Japan has kind of forced investors' hand in one way or another. Obviously, this is still a developing story, so we'll keep an eye out here, and if anything happens, we'll be sure to include it in our newsletter this week. But I do think that that would be a kind of major movement for the traditional equity market, which then in turn affects the crypto market as well. That's my first, the first thing we need to tackle, I think.
No, these are fantastic points, and I think it's also a good segue to your view also for the US markets. We actually had in the audience a question on the carry trade that you just mentioned in Japan. So
Yeah.
the question was, how much longer do you expect the carry trade to happen? The short answer is that we don't know yet. This is a story that is still developing, as Max mentioned, but there is about 99% now expected probability that they would get to a 2 rate cuts in Japan. This is, based on market sentiment and surveys. Some of the surveys are not always statistically significant, but I still think that this is worth highlighting, that what we're looking at today is how the Japanese market is going to also be impacting the crypto market. Because when we saw the first rate hike by the Japanese bank, so the Bank of Japan, we've seen that there was an increase in volume by crypto exchanges based in Japan as well, investing direct in Bitcoin, especially when the yuan and the dollar actually had an imbalance, when the dollar was a lot stronger than the yuan. So these are the things to also expect on the causality of the Japanese market and the direct impact to crypto as well, which may, of course, impact the existing investors in terms of market sentiment. But I think it's also worth to highlight that we've seen more volume as well, or increased volume from the Japanese market in the crypto asset market as well, and on the positive side too.
Yeah.
Lena,
sorry, it's exactly that. I just checked, and the trading volume on Bitflyer actually has surged by over 240% in the last 24 hours. So it's exactly what you're mentioning there, Ellie.
Absolutely. Absolutely. And again, the thesis and the ethos of crypto assets, and not just Bitcoin, is actually to provide a global and neutral infrastructure for applications like Ethereum and Solana, but also as a global and macro asset for Bitcoin. So these are the things that we should also highlight. And we will be sure that you will be in touch as well with our research and newsletters and different webinars moving forward. And if you have any questions about our research, of course, feel free to reach out directly to our research team at research@21shares.com as well. Lena, what do you expect moving forward, especially in terms of the existing correlation level with the equity market that we've seen rising recently? What do you expect the price movement to be in the next month or so? Of course, it's very hard to make price predictions, but from what we've seen with the drawdown and the collapse in the markets during March 2020, we've seen that the price of Bitcoin rapidly soared at a time after the crash to new highs by more than 20% within 2 weeks. So what do you expect in this contextually different environment, especially with the tensions in the Middle East and the potential exacerbation of the conflict? What is your gut feeling?
Thank you for giving me such a difficult question. That's first. But yeah, for sure. I think it looks like we're in a very bad place, but I'm not exaggerating by saying that there are good tailwinds coming right next month, or maybe by the end of the month. We have the CME FedWatch tool has priced in that there's a likability of 90% that a rate cut will happen. I think the equities market and the crypto market have been hungry for that for over, I think, a year now, if I'm not mistaken. Something else is I think I read one of the questions. Yeah, the presidential elections is a big catalyst As we've said before on this webinar, having Bitcoin and stable coins actually emerge into aiding the world's biggest economy is huge for both assets. And even if they don't materialize, just the mere mention or the entrance of in this big conversation speaks volumes of the fundamentals that Tom just mentioned. So that's second. Third, for the Middle East conflict, I'd like to say we're heading towards the end of it. Maybe we can finally turn the page. However, it's more complicated and it gets more complicated. But I think the silver lining here, it will definitely be overshadowed by the US elections coming up in a few months.
And Tom, thank you so much, Lina. Tom, what do you expect moving forward, especially when we're looking at the fundamentals around, for example, the share of centralized exchanges and decentralized exchanges, where we see the share of decentralized exchanges increasing with the innovation of smart contracts on Solana and Ethereum, but also the impact that we've seen of, the ETF market giving a broader access to Bitcoin and Ether in the US, but also more broadly in Europe as well, with several access points to various crypto assets. What do you expect moving forward, especially looking at the fundamentals on the on-chain data side?
Yep, absolutely. So what excites me most is the real-world application or adoption of the public blockchains. First of all, we're seeing tokenization is one of the largest themes that is happening across institutions and banks and financial institutions, right? Recently, one of the largest asset managers called 𝕋𝕚𝕞𝕖 also tokenized one of their private funds on Solana blockchain. Previously, they have already tokenized their fund on Polygon blockchain. And we are already seeing a lot of the appetite of tokenizing US treasuries has been growing tremendously, over 400% year to date over the past year as well. Until now, we have reached over 1 billion AUM in terms of on-chain tokenized US treasury in Ethereum, Solana, Polygon, so on and so forth. And we definitely should expect this trend continue in the long run. And me personally believe we can potentially reach 3 billion AUM in terms of on-chain US treasury by 2024, end of year. And aside from that, we're also seeing another interesting use case in crypto, which is Poly market. It is one of the largest prediction market in this space, and it's not only used by crypto native people like you and us, but in the meantime, it's also being quoted by major media outlets to quote about the US election potential win rate of different nominees. Over the past few months, we've seen that the prediction market has reached 1 billion volume over the past few months. We have seen that on different types of, for example, like this is one of the major adoption in crypto, definitely, for the prediction market. It's not only used by crypto native people, but also more broadly in the whole world as well.
And in terms of price action, given the fact that you always crunch numbers, looking at the past and previous, bear markets and market corrections, I think clearly Bitcoin has become, and also Ethereum has become macro assets for traditional finance investors within their traditional portfolios in their alternative suite. But what do you expect moving forward? Because as I mentioned previously, after the COVID-19 market crash, as well as the China ban in May 2021, we've seen an uptick in the price quite rapidly within a few weeks after the lowest point in price at that time. So back in 2020, it was about, I believe, $5,000. And 2021, I believe it was going down to 35,000 at that time, when we had actually the crash from the China ban, moving from $50,000 to 35K. What are you expecting for this one? Because clearly we're seeing, to some extent, panic selling. But do you expect a similar pattern, and what would be the probability of that pattern moving forward?
Yeah, I definitely see the this is an oversold event, and it could bounce back quite aggressively in the coming days. One thing that we are seeing is the liquidations in the broader crypto market today is reaching over 1.1 billion, and it has exacerbated the overall drawdown in crypto prices, and therefore we could potentially see a more aggressive rebound in terms of price action. And looking forward in a longer time frame as well, I would also keep an eye on the potential announcement from the US government on potential, is there any measures to help out the US economy market, given there is broader concern on US entering a recession, and we're seeing different tech companies missing their revenue and earnings target as well. So that is something I would keep an eye on, and that potentially can spur and become a major catalyst for a rebound, a more long-term rebound as well for the crypto market and generally the equities and bond market as well.
No, this is a great answer. And one of the questions that the audience had was, what does it mean for the price of Bitcoin? The Fed does not, have a rate cut in September. I think there are key metrics to always look into. And I would say number one is the correlation with the existing market. Two is the volatility of the asset class, especially Bitcoin and Ether, as well as Solana, to understand the volatility level compared to some of the market crashes that we experienced before. The volatility level today increased. However, we've seen that it's not at the level of market panic that we've seen before. Two, and I think the third metric to also think about is the on-chain metrics that Tom mentioned as well with the investor behaviors. So to combine all of these different metrics together, feel free to check out our research or sign up for it if you haven't yet, so that you can have an easy access to research and education from our wonderful research team on that. The other question was, what do you expect for the Bitcoin ETF flows in the near term? More selling pressure or buying power? What would be your gut feeling here?
I mean, for me, I think it's the first thing I'd like to point out, looking back, is to one positive thing that I still think we should remember is what Tom highlighted towards the end regarding the fundamentals. The fundamentals haven't changed, and the kind of value proposition of both Bitcoin and Ethereum, they're very much still intact, regardless of this market drawdown. I think it's worth to point out that these kind of events culminated and kind of peaked over the weekend when crypto was the only tradable asset. And due to the number of ETFs that are available out there, it's becoming more and more in the hands of traditional investors and more in the hands of what we labeled in that graph as kind of short-term holders. These are the individuals who, when they see a market drawdown like this, are more likely to kind of sell off their positions than the kind of long-term holders. As we see with this kind of healthy correction, I only really see it for new entrants as a kind of opportunity to enter the market. So for me, I could see this as a event to kind of trigger more kind of buying opportunities for those traditional investors who were previously a little bit afraid of how high the prices were and felt that they couldn't enter the market in times like that. So I do think this is a kind of opportunity, and it can be labeled as such, obviously with still some eye on what's going on in the US and in Japan.
Absolutely. I think this is a great closing thought, and we're almost at time. First of all, I want to thank our fantastic panelists for this wonderful panel, Lena, Max, as well as Tom, for spending the time and the research on providing top-notch insights for our investors. For the audience, thank you so much for your time. We hope it was really helpful. Don't forget to sign up for our research. And of course, never also forget that everything that we shared today is not financial advice, nor legal advice. We are providing simple information for information purposes only. But if you have any questions, feel free to reach out to directly to us. So research at 21shares.com or sales at 21shares.com to help you in your journey. And we're going to be sharing as well the recording afterwards from our wonderful marketing team. So without further ado, well, thank you so much, and we wish you guys a wonderful day or a wonderful morning, depending on where you are in the world. And thank you so much, guys.
Thank
Thank
you.
you.
Thank you
Thank
so
you.
much, guys. Bye.
Bye-bye.